Good day, everybody. This is Jim Sloman speaking. Here we are looking at a weekly chart of gold, and let's just review briefly the different indicators we're looking at here. Up here at the top is the triple STX, the regular STX in light blue here, the fast STX in orange, and the slow STX in purple. And down here we have the BTX2 line. The green line represents the bullish energy of a market, or its tendency to go up. And here we have its center moving average and its upper standard deviation. Down here in the red is the bearish energy of a market, or its tendency to go down, and its center moving average and its upper standard deviation. Down here we have the component 4 line, also using STX technology. Here we have the fast line, the medium line in green, and the slow line in orange. And we include the 0 line because it can be part of the compressions or conjunctions or singularities such as occurs right here. So we call it the component 4 line. Down here we have the BTX1 line, which is a non-directional trend indicator. It basically measures the energy of a trend, whether that trend is going up or down. Over here we have the natural moving average. All of this is from ocean theory, by the way. And then the fast natural moving average here in orange, and their upper and lower standard deviations in the same colors in the dotted lines. Right here we have the NMC2, which provides the basic shape of a market and can also produce 0 hits from above or below, as you can see here, or sometimes near 0 hits, which it looks like this is. Down here we have 2 bounded rainbow indicators, as they're called. The one in orange is the NST, and the one in blue is the NDX, and then in green here is their combined natural moving average. And then down here we have the NMC, and that is also capable of producing 0 hits from above or below, and its natural moving average here in green, and its fast natural moving average in red, and its upper and lower standard deviations here in the dotted lines. And by the way, here in the NMC2, the green line is the natural moving average, and the red line is the fast natural moving average, and the dotted lines here in orange are the upper and lower standard deviations. So let's see what we have. Notice here that we had compressions in various places where the triple STX came close to the others. Right here is a compression, for instance. Right here is another one. Right here is another one. Right here is another one. And in each of those cases, whenever price moved above the triple STX compression, you started another leg of the bull market, such as here, such as here, here, such as here, such as here. What do we see now? First of all, we see that the shadow, which has been calling these turns quite exceptionally well, here, 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 has turned down, and the shadow is pointing straight down at this point. And price has moved below both its fast and its regular STX. So that would indicate, among other things, that price probably has further to go on the downside, and we'll have more to say about that. Notice here in the BTX2 line that we got a turn down in the energy right here from its upper SD. It then passed through its center moving average and is now pointing straight down. Meanwhile, the bearish energy has moved up through its center moving average and is pointing up. So the two, it looks like, are going to meet right here, which has happened here and here, for instance, here and here. The question then becomes, will it bounce off this line here as it did here, as it did here, as it did here, as it did here? Will it do so again here, or will it cross through? I think gold is very much still in a bull market, and so my expectation is that once BTX2 line reaches this point, it probably will bounce off. That's reinforced by the fact that, notice here we've had a compression here, another one here, another one here, another one here, where they come together in various ways. And it looks like we're in the midst of having another one right here, which probably will reach its full point of compression right about in here somewhere, maybe even down at the center line here, the zero line. And we notice that right here, price on the BTX1 line, the non-directional trend indicator, the energy's been falling off here, but it's now at the 35 level, which is the basic level at which a trend either thrusts to the upside or continues down. Chances are that price is going to continue down into this area here, which happens to be the natural moving average right here. So this level here around 12, 85, 82, something like that. Notice that we've also had violations of the upper standard deviation 4 times right in here, as happened right here, as happened right here, as happened right here, as happened right here. And notice that each time as price came down from there, that it was stopped by the natural moving average, as it happened here, as happened here, as happened here, as happened right here. My expectation is that that is what will happen again, that price will come down to its natural moving average and then start the next leg up of its bull market. And in fact, that is healthy. It's not healthy for a bull market to just keep going up and up and up without periodic corrections. It's the periodic corrections that allow it to gain energy and begin the next move up. And so we expect the same thing here. Now, were price to go below its natural moving average at this point, we'd have to reevaluate. We would do that in the next financial weather report. But in the absence of other evidence, we expect it to come down here and then bounce. Now, this is telling the same story. Notice that the NMC2, which provides the basic shape of a market and which provided very beautiful zero hits or near zero hits here and here and here and here, looks like it's in the process of providing another one. So if and when price comes down to this area here, we'd probably be getting a zero hit from the NMC2 right in here somewhere. And we'd probably be getting, notice that we also had compressions from the bounded rainbow indicators right here, where the two come close together. This one here wasn't as pretty as we like to see it, but still happened, and right here. And this one, though, is forming up to be quite pretty. It looks like it's going to come down into here and then bounce in this area here, just as this is making a zero hit from above. And the NMC2 here is giving us a zero hit right now, which tells us that it is conceivable that price could bounce right from here and go up from here. I think that's the less likely possibility, but it is possible. Both this and this, that it's right at 35, are telling us that. In order to resume the bull market and give a clear indication of that, price would have to clear above its fast natural moving average. Again, that is the lesser expectation at this point. We think price will continue down into this area here. Okay, let's now go to a daily chart of gold to get more clarity. And notice that we had nice compressions right here, right here, right here. And notice how beautifully the shadow has been calling these turns here during this these 4 tops. So right here, right here, right here, right here, and of course the bottoms right here, called another one here. Notice, however, that price came up to this area here in this compression, pulled away from it, and that the shadow is still pointing downwards. So that tells me that it's most likely that price of gold will continue down for a while. Probably, here's our target right here around the 1280, 1283, 1284, 1285 level, which again we got from looking at the natural moving average right here. Okay, and what do we see here? First of all, in the BTX2 line, we see that price has moved. The bearish energy is moving straight up. The bullish energy is moving down. The bearish energy came up here, bounced off the center line here, and has moved up ever since, indicating a continuing move down here most likely. Notice that price has also moved down below all three of its triple STXs. Notice that we lost the beautiful positive continuing fan formation that we had right here. Notice the compression right here. And then this up and down zigzag motion here, but still basically above zero, but now moving below zero, and then coming up here to the zero line, pulling away from it as it did here, as this did here. So all of which indicating a continuing down move. Notice here that we had violations of the upper SD right here, right here, right here, right here, came down, came back to it right here, and has now pulled away, providing further confirmation. And that's what we try to do in ocean theory, is we look for the indicators, since they're all doing much different mathematics. We look for them to line up and stack up. If they're all, if the preponderance of them is giving a similar message, then we can be reasonably sure that what we're seeing is a good prediction of what's going to happen. So we're seeing the same thing here. The fast NMA has moved below the regular NMA. Price is below both. Notice here that notice that the general shape of the market here has been above zero, as sort of up, then gradually down. Notice that we have, during this series of tops here, a series of lower tops in the NMC2, and is now passed below zero, came up here, touched in the zero area, and then has pulled away down again, indicating again a more substantial move down. Notice that in the bounded rainbow indicators, they came down, came back up here to zero, and then have pulled away from it, moving down, still pointing down, both below both zero and their natural moving average. Further evidence that most likely the gold market wants to continue moving down to our target here. Notice here we have a series of lower lows during this series of tops, again showing as this did here, and a series of zero hits or near zero hits right in here, both of these below its natural moving average. Again, more evidence that most likely gold will continue down until it reaches the target here. What it does there will be very decisive. Most likely it will bounce from there and continue its bull market, as we've seen here and here and here and here. But if it were to go down through its natural moving average, then we'd have to definitely reconsider and form a judgment at that time. That's all for today. May every possible good fortune be yours until we meet again. Bye-bye now.